where we aim to get you all the data points with regard to today's trading action, and also we set you up for tomorrow's session. I'm Naishal D'Souza, joining me, my colleague Reema Tendulkar. Reema?
Hi, we're going to be with you for the next 20 minutes with all the big news, key developments in Dalal Street, the top corporate voices and the events to track ahead. But first, this is the way you want a Monday morning, right? Yeah. All green screen, very strong.
Well, Reema, the positive was today we started off well in the green and we built on those gains, because the first stick was well in the green and then we sold off a little bit. But towards the end of trade, the last stick was closer to the high point of the day and it took off a technical indicator as well, which is the 20 DMA. That's the kind of screen that you like to see. Just take a look at that. Intraday, there was a bit of a dip, but we end at the high point of the day. So starting on the front foot is half the job done. Ending at the top is something that the bulls will like. Well, it was a bit of a mixed bag. Keep in mind, we're talking about ending at the high point of the day, but the largest weight on the index didn't do well. That is HDFC Bank. The problem was it went into its numbers expecting some kind of a positive outcome. So yes, the commentary was fairly good. Maybe they focus more on the return ratios, focus more on the profitability, but the street is still a little bit skittish. What is that positive trigger that can take the stock higher to around that 1600 to around 1700 odd mark? In the near term, maybe we have seen a bit of a price correction, but the stock could be in for a time-wise correction unless there's a positive surprise that comes in from the MSCI. On the flip side, the PSU banking names did very, very well. SBI has been a rank outperformer. Today, it continued its good run. And with that, it took the PSU banking index as well higher. The positive from the Indian market standpoint is Brent crude prices have cooled off. It was threatening to move towards $95 per barrel. It's cooled off to $87 per barrel. And that's why OMCs did well. HPCL, BPCL, they did well because otherwise when rising crude oil prices and with an election that's, is underway, then they won't get a price increase. So both of them did spike up in Interglobe Aviation as well. Demand has been good. Fares have been going up, and now you have crude oil prices that cooled off, so the stock bounced back in trade. And Reema, we would talk about the headline index and said, well, it's a great day. But I think the real picture is in the broader markets, because even by the end of it, you had more than 1,000 stock difference between the number of stocks advancing in comparison to the number of stocks declining. And that's the reason that your portfolio is looking very good today.
Well, indeed. And look at the small cap index. The small cap index ended with a gain of close to about 1.3%. But today, the Asian market backdrop was also positive. So markets like Hang Seng, Korea, South Korea and Taiwan all ended with gains of more than 1%. So most of Asia was higher, and that helped the Indian markets close strong and very, very stable. Also, another important fact that today is a very strong follow-on rally. On Friday, the market saw a big intraday pullback. The low on Friday was 22,777. From that level, the Nifty's added close to about 550 points. And all eyes are going to be on Reliance Industries. So that's the big boy. That's the engine. We will see if it fires or not today. But we'll tell you what we've lined up for you on our show today. We start with the top movers and shakers of the day with Vivek. The stock of the day is Gujarat State Petronet, GSPL. The stock plunged nearly 20% following a PNGRB decision to slash tariff. We'll get you details on that. Also, our popular segment, D-Street Chatter, is on the show, and we delve into the key market events to watch out for. But first, let's get to Vivek, who is at the big wall with all the top stock movers of the day. Vivek.
Well, good afternoon, and like you mentioned, a very good day as far as the bulls were concerned. Quite a lot of interesting stocks on the radar. First on our list, a company that will come out with its results tomorrow, Tata Consumer, managing to end near the day's highest point. The next set of stocks were actually the holding companies. The stock on the radar, of course, was Maharashtra Scooters, one of the strong rallies. But news flow indicates that SEBI is now looking to go ahead and propose a special auction for price discovery of listed investment holding firms. On the back of that, Maharashtra Scooter, along with a whole host of other holding companies, did quite well in the session today. The third stock on the radar is Voltas. You did see a significant upgrade coming in from UBS. They upgraded the stock to a buy rating. They see increased market share gains for Voltas, and on the back of that, stock ended higher by close to 6%. The next stock was Aditya Birla Fashion. The company gave an update to the exchanges in terms of the demerger update, and what they did was that they went ahead and demerged Madura Fashion and Lifestyle into a company known as Aditya Birla Lifestyle Brands. Stock ended higher by over 4%. The next stock on the radar was a results reaction. Sterling and Wilson Renewable Energy. There was a bit of volatility in the first half of the trading session, but after the con call, very good commentary coming in at good guidance as far as FY25 was concerned. Stock ended at the upper circuit, higher by 10%. Exide, continued its stellar rally this particular month. Exide is up 52%, very, very strong move today, higher by another 5%. And Idea, while the stock ended flat, there was a very sharp intraday rally that we saw in Idea, ended near the day's highest point. The FPO finally got fully subscribed. Now, coming to the list of stocks, that saw significant selling pressure throughout the trading session, one that we'll discuss in greater detail later on. GSPL, PNGRB went ahead and cut GSPL's high-pressure tariff pipeline by over 47%, and that took the stock close to the lower circuit of the day. Persistent systems, like you highlighted throughout the day, the worries of margin expansion being delayed beyond FY25 is something that the stock had to deal with. Stock ended lower by over 9%. And lastly, Spark, this particular stock continued its lower circuit journey, down for 8 straight sessions of lower circuit, and this particular stock is down 30% in the last 8 trading sessions.
Thanks a lot for that, Vivek. Well, we have with us our market expert, Anand, Tandon, as well as Shilpa Rout of Prabhudas, Lilladher, who joins us on the show. Hi, ladies and gentlemen. Thanks so much for joining in. Well, Shilpa, tell us, what do you make of today's trading session? You had a bit of a blip. We went down to around the 21,700 odd mark, but the bulls are coming in, and today they were charging ahead. What are the levels we can see on the upside, and how would you trade it now? Trail your stop loss?
Yes, definitely trailing stop loss. Those who have bought at around 21,900 zones, I believe trailing a stop loss to around 22,100 would be wise now. The texture is still, little chaotic, but, maybe more firm on the upside, where we can see 22,500 to 22,600 levels in a couple of sessions from here. So stay intact on the long side with 22,100 on Nifty as your trailing stop loss, and Bank Nifty today closing at, nearly around 48,000. So once a decisive move past this 48,000, we'll see, sharp up move towards 48,500 to 49,000. So trend is firmly on the bullish side, but, these little critical levels wherein, you have to just wait and watch and trade your stop loss.
Okay, let's get to the stock of the day, and undoubtedly it was GSPL, down close to about 19% after PNGRB has cut tariffs for one of the company's key pipeline networks. Sona joins in with the details. Sona.
Well, yes, it's an unexpected huge cut that has come in by PNGRB. They have gone ahead and slashed tariffs for one of its key pipelines in Gujarat. The cut is to the tune of 47% to come in at 18.1 rupees per MMBTU versus the earlier price that they have of 34 rupees. And remember, GSPL had asked for a 50 rupee tariff on this particular pipeline. Of course, things change a little bit after that in terms of macros, in terms of volumes, but the expectation was that the cut could be to the tune of 10 to 15%, but this is much more than that. And management has indicated that they are studying the order and they will come back with more comments on the same. Now, what would this do to their EPS? A 30 to 40% cut is what analysts are penciling in for FY25 on the back of this tariff cut. Remember, Gujarat Gas also is in focus because GSPL holds 54% stake in this particular company. Now, what are the reasons of the cut? The first is there has been a change in volume assumption. The PNGRB volume assumption is higher than that of GSPL. And second, the economic life of the pipeline has been extended as per the assumptions made by GSPL or by the PNGRB. On the back of this, brokerages, they have gone ahead and they have cut target prices. They have also downgraded the stock. Nomura has cut the EBITDA estimates for next 2 financial years by 37 and 42%, EPS by 34 and 40%. They've downgraded the stock to a reduce with a lower TP of 320 rupees per share. Citi has cut the target to 295 from 330. MK has downgraded the GSPL to a reduce from a buy. The target price is cut by 11%. And Kotak has also downgraded the stock to a reduce. They expect the company to challenge the order, but in the interim, it's a big cut, and that's why that big fall on the stock today.
We have given the 12% post-tax IRR that is there. That is as per the regulation. So there is no cut per se in the tariff. It is only adjustment. I can't say it. I can't commit that way whether it should be lower or higher. But 12% post-tax IRR is the benchmark of the in the regulation. So that is there. There is no question of any negotiation. If you see the performance of GSPL from the last 10 years, their volume has already been up, means 31 MMSCMD plus, and last year volume was 34 plus. So as per the regulation, we take the actual volume of the past years as well as the last year. So that way we have given, but they have projected that there will be some customers base, some customers will not take the volume. So they have projected 26 SNB up to 2031, which we believe that may not be correct.
Anand, the EPS cuts are much higher than the stock price correction. The stock fell 20% today, but the EPS revisions are lower by 30 to 40%. Do you see more downside in GSPL? And what's the advice for shareholders who own the stock now?
So if the market goes down further, it may actually become a buy. It's finally a regulated entity which has a fairly strong performance track record. Large part of the valuation also comes from its subsidiary, which I don't see is being directly impacted. The GSPL's own business, of course, will take a huge cut in terms of the earnings, and therefore you will see a sharp earnings downgrade, like you mentioned. But that said, I think, if you're looking at revised valuation, I don't think that it cuts down as much as the EPS does. So because it's after all a long-term cash flow that you will be looking at discounting, the immediate impact will be a little more, but not to the extent of the prices. So if you get another day of a downtick, I think you may actually find that it will probably be a good place to enter for a slightly medium-term kind of earnings.
Okay, all right. Stay with us, Anand. Well, let's focus on the next stock. Aditya Birla Fashion and Retail. The stock jumped close to 4% after its board approved the proposal of vertical demerger of Madura Fashion and Lifestyle from ABFRL into a newly incorporated company. Vamakshi joins us to fill us in with further details. Vamakshi?
Well, absolutely, Nigel. When we look at the counter that has been in focus over the last couple of sessions, in fact, the board had authorized the management to evaluate this potential demerger back on April 1st, and the very next day, that is on April 2nd, we saw the stock surge by almost 11.5%. Now, of course, the board has gone ahead and given an approval for the demerger of Madura Fashion and Lifestyle business into a newly incorporated company, that is Aditya Birla Lifestyle Brands. Now, keep in mind that most of the details that came through were already known back on April 1st, but there are a couple of details with regards to the debt as well as the equity fundraise which are new to the street. The development is as such that it will lead to the creation of two separately listed companies, Aditya Birla Lifestyle Brands, which will house brands like Louis Philippe, Van Heusen, Alan Solly, Forever 21, as well as Reebok. Now, this part of the business is rather stable. The business has posted a revenue of almost 6,350 crore, growing at 5% with EBITDA margins of 15.6%. In fact, it accounts for nearly 60% of the company's revenue and 75% of the company's EBITDA. Overall, the borrowings for ABFRL as a company stood at 3,000 crores as on 31st March 2024, and out of this, 1,000 crores will now be transferred to this newly demerged company, that is ABLBL. Apart from that, the remaining ABFRL business, which includes brands like Pantaloon, the ethnic wear portfolio, digital brands, amongst others, they will retain debt of almost 2,000 crores. Additionally, the company has announced that they will be raising around 2,500 crores within 12 months of demerger. So, assuming the debt of 2,000 crores and equity fundraise that will come through 2,500 crores, we expect the company to be net cash positive in the next 12 months. Analysts believe this is largely positive for the company, but because this whole activity will lead to value unlocking as well as a strengthening of the balance sheet. So, overall, a positive development for Aditya Birla Fashion and Retail.
Thank you very much for that. Persistent Systems, though, on the other hand, was under severe pressure, down close to about 10%. After the management guided that FY25 margins could be flat. So this may have disappointed, analysts who were, or the sell side market who was hoping for some margin expansion. Because about 3 months back, the street was hopeful that margins in FY25 will be higher than FY24 margin by more than about 100%. But now the companies say that the margins could be flat. So maybe there could be some estimates which need to be reworked. And plus, the stock has been a big outperformer in the last 1 year. Persistent, in the last 3 years, the stock is up close to about 300%. And plus, valuations too are on the higher side. Shilpa, 3,500 on Persistent. What's the trade looking like? Is there a trade? And what would be the key markers?
Persistent, we have been recommending a sell since the levels of 3,900 and 3,950 with a stop loss of 4,000 for the targets of 3,500. So as of now, we are met with a selling target of 3,500. I believe, the stock should hold around these levels and a bounce can coming towards again 3,700 to 3,800. Nonetheless, tomorrow maybe we should once again reiterate and see, how the stock is.
Okay, all right. Shilpa, thanks a lot for that. Well, final question before we let you go, Anand. What about Sterling and Wilson? The stock hasn't been a great performer, but now they're giving a very, very good guidance for the coming year. And that's why post its numbers, the stock opened up a couple of % higher. But it got locked in upper circuit midway through the trading session because of the positive guidance. Your take?
I think this is not a company one should be looking at the history, at least the near-term history. In the past, when it was unlisted, it was quite a good company. And then it got caught because of the debt issues that it had with its earlier promoters. With the change that we have seen, I think that will not be an issue anymore. And therefore, you can actually look at the underlying business, which looks, as you mentioned, quite robust based on whatever they've indicated so far. I would just caution that the outlook for solar is not that great as it was a while back because of the kind of price drop that we've seen overall. But so long as the order book for this company is looking good, it's not that expensive.
Got that. All right. Thanks a lot for that, Shilpa, as well as Anand, for joining in, giving us your view on all the stocks that we just discussed. Well, let's move on and let's take note of all the top corporate voices we got for you during the course of the day. Hindustan Zinc, that was higher in trade after it reported a largely inside of numbers in Q4. It expects the cost of production to dip towards $1,000 per ton, adds that there is no fresh proposal to buy Vedanta's zinc assets, but the focus now is on doubling the production. The management also said that the valuation may be $4 billion more post the demerger of the businesses. They also bat for the government's divestment of their stake via the OFS route in the near future.
RHI Magnesita's top bosses, the global CEO and the India head, said that they expect their market share to improve to 40% and exports to double to 25% in 2025. They add the acquired assets are now at 60% utilization levels, but they will improve to 75 to 80%. Moving on, HDFC Bank, that big bank, was under pressure post their Q4 numbers. MD CEO Shashi Jagdishan, in their conference call which took place, said the key focus is over the medium term is to improve profitability, ROA and EPS. Adds that the bank needs to ensure that it is at par with key players in the market with respect to deposit pricing. Also tells investors in the post-earnings conference call that the bank will continue to invest in distribution, people and technology, and they will continue to focus on quality and the balance between risk and margins. Well, with that, it's time for a short break. We'll get you our popular segment, D Street Chatter, on the other side. We also have the big events to watch out for list on the other hand. Welcome back. You're watching Markets Forward, and now it's time to tell you how dealing rooms were performing in today's trade. This is D Street Chatter. Nimesh joins in with the insight. Nimesh.
Hi, Rimano. Very strong day for the markets. In fact, it actually built on the gap up opening, and that was largely backed by some FI buying as well. So I understand there was very large basket buying as well at leading FI desk. In terms of sectors, OMCs were well bid, and so were the private bank stocks as well. Even technology, while the overall index may look down, but there was some bit of selective buying in technology stocks as well from the larger institutions. So that's overall markets. Now, from an individual stock perspective, the first stock on my list is Jio Financial Services. That was buzzing in trade on large volumes as well. I understand a leading US-based fund is an active buyer in Jio Financial in today's market. So that's the first name. The second stock is Power Grid. That's been consolidating the last couple of days, but strong delivery has been marked. Even in today's trade, there was a very large FI buying and that's the reason why you'll expect very high delivery volumes in power grid again in today's market. So that's the second name. The third stock is Excite. That's been a big outperformer in the last 15-20 days. The stock is at a 50-week high. Again, it was buzzing 5% in today's market as well. But at these levels, some bit of profit booking is creeping in. I understand there were strong sell flows as well at the leading FI desk in Excite today. And the last name is Biocon. While the stock is in the FNO ban, there was bidding interest from larger FIs in Biocon as well. And the city is anticipating some sort of a corporate development in Biocon in the future. So that's the reason why, despite the stock was in ban, the stock ended 4% higher. That is Biocon in today's market.
Okay, all right, Ramesh, thanks a lot for that. But before we wrap up, let's go across to Mangalam. He's getting us all the key market events we need to track. Mangala?
Well, the most important event to track tomorrow will be the reaction to Reliance's results, which will be post-market in today's trading session. More importantly, we'll watch out for the management commentary and how the performance of each of the verticals of the company are. Thereafter, there will be a bunch of results that will be reported tomorrow as well. And from the Nifty, we have Tata Consumer out there as well. Double-digit revenue growth expected, almost 18% jump in the EBITDA. ICICI Pru, M&M Fin are a couple of other names that we'll be looking out for. In terms of the FNO space, we'll look at MCX and 361, not an FNO stock, but one which has been moving, pretty hard in the last few weeks. We'll keep an eye out on that stock as well. Apart from that, there are a couple of analyst meets which are going to be, held tomorrow. So we have Adani Ent and Persistent Systems. Persistent Systems, more important given the stock move that we saw in today's trading session. And we have a bunch of global cues as well. A lot of global PMIs from India, Europe, UK, US, all of them in focus. The Singapore CPI will be there along with Bank of England member speech. And finally, the US will have a whole host of data that will be reported as well. There'll be the Red Book Index, new home sales, Richmond Fed Manufacturing Index, all these important from a US macro standpoint.
Okay, thank you very much for that. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.